Hello, everyone. Welcome to this video. The purpose of this video is to talk about a new investing system that we have developed. So the format of this video is a bit different than usual because when we made a video before, it's been for YouTube, but this video is more like a video diary for us. And then if we want to publish it later, we will do that. So because we're developing a new system, we want to check if it works before we start actually publishing videos to YouTube. So today is the 8th of January, 2023. And with that said, let's move on to the new investing system.
Right. So before we move on to the details of our new investing system, let's quickly cover why we haven't made videos for a while. So firstly, it has been the fall in stock market over the last year or so, which is probably the last time we posted. This fall in stock market, it's reduced the value of our holdings, which isn't always the nicest thing to see. It makes us, or it did make us question our process, whether we're investing in the most optimized way. And it made us a bit, frankly, self-conscious to publish further videos because, what we're saying, we're saying things and we want them to be true. We're putting ourselves out there on the spot. And it just made us question our process a little bit, but that's not necessarily a bad thing. It's made us take a step back, reevaluate our process, and work on something a bit new, which we'll cover a bit later. Secondly, life got busy. So within our personal lives, we got married, moved countries, been looking for new jobs, and that's a lot in such a short space of time. And frankly, it just didn't leave us enough time to make videos, which takes us nicely onto the third point, which is that for us to make videos, it does take time. It's there's a lot of work that does go into making and publishing this content. And for us, we wanted to prioritize on the act of investing, which is buying, selling stocks, and doing that in an efficient way. And as such, we've been working on a slightly more slicker new system, which we're going to detail in the next slide.
Moving on to our new system and what it consists of. So it's still based on the same principles as before. We're still trying to buy quality companies at a good price, but our new system is more factor-based and less qualitative, meaning we read less annual reports than we did before. And by factor-based, we mean that we look at specific set of factors, such as high return on equity, high margins, stable growth in revenues, and low debt. And we use those to determine if a company is high quality. So we go through a checklist of these factors to see if the company meets our criteria. And if they do, we buy those companies at a discount to fair value. And we calculate fair value by using a DCF model, which we've done before. And we also look at the valuation multiples to see if they look attractive as well. And we use both of those in combination with the DCF model. And we use a specific discount rate for all companies, and we also use a specific calculation to calculate the future free cash flow based on the historical free cash flow of each specific company. So obviously each company will be slightly different. And I mean, even though we said that we do less qualitative research, we still look at, for example, the latest annual report, just to make sure that we haven't missed anything or that there are any glaring red flags that we need to be aware of. And when we buy shares in a company, we first allocate 5% of the portfolio to that company. Then if the price falls 33% from the purchase price, we allocate another 2.5%. And then if it falls 66% from the purchase price, we allocate another 2.5%. So the maximum that we allocate to a company is 10% of the portfolio. And the reason we do this is because when a share price falls, it can be a bit emotional and you start questioning yourself of when to buy more. So if we have this rules-based system, it's easy to follow and less emotional when a share price falls. And lastly, we aim to build a portfolio of around 10 to 15 stocks, depending on how many quality stocks we find, because we believe that that number is it's a decent number to be adequately diversified.
Right. So on to why we are using this new system, or why we've developed this new system. So firstly, we are more numbers based as people. We enjoy looking at the numbers. It's our strong point, and ultimately that makes the investing process more enjoyable for us. Secondly, if a company is good enough, we believe that you can quite confidently determine whether it is high quality by looking at the numbers. I mean, this isn't going to work every single time, but if you've got a diversified portfolio of such companies, then we trust that the company of the overall portfolio should be good and balance out. As a result, this process is more efficient. We're able to screen companies within a couple of minutes, and we're able to make investment decisions a lot faster within a few hours, whereas our prior process used to take us, I mean, probably a few weeks or something like that. And as a result, this process has made us less emotional, more facts-based, and a bit faster to make decisions. Reading annual reports, whilst they can provide detailed insight, we did find this to take up a lot of time. For example, there'd be times where we would read for hours and hours. We wouldn't make a decision because we'd be thinking, right, we could always read a little bit more. And under this whole process, even when we were happy with the numbers, we'd fall into the trap of, let's keep looking at the reports, let's get a bit more comfort, when we could have been using that valuable time to invest.
Okay, so let's move on to the conclusion. So the whole point of this video is that we have developed a new investing system that's more focused on factors, that is to say data, and less focused on qualitative research. And we made this system because we wanted to be more efficient. I mean, we didn't have time to do hours and hours of qualitative research. And we also felt that this type of factor-based system suited our temperament better, because it's more focused on data and less focus on the qualitative, and it made it more fun and less emotional for us, which is very important when you want to do something well. And we're currently in the testing phase, and we are therefore creating, diary type videos to chronicle our journey and to see if the system works. And once we feel confident in the system, we will publish the videos, because it's important for us that we test it before we share our ideas out there, and we might not publish them at all. But I mean, if you're seeing this, we have published them. But anyway, that is the summary of the new investing system that we wanted to share with you. And thank you for taking the time to listen to us.